Good morning. Today is September 4th. Obviously, we've made it to the Labor Day weekend. Thinking about all those with Hurricane Dorian, of course. And for the rest of you guys, stay out of the way, stay out of trouble. What we're going to do today, I want to go through some of the basics again with you guys. Not only our basics, but some basics altogether. So, again, first, real quick disclaimer. We don't call trades for you. We don't give you advice. And we really want you guys to use our tools, which is, look, Nexgen sells software. We sell Fibonacci-based software, and we wrote a plan around the software. That's what you're buying. Okay? And we try to help you understand that, whether you're reading the software correctly or not. That's our job. That's it. That's where our job ends. You guys have the hard work, and this is why we don't take credit for anybody's successes or anybody's failures. But what I wanted to do today, and I want to preface it with, we're going to be looking at an external website from the Chicago Mercantile Exchange Group. If you guys are unfamiliar with the Chicago Mercantile Exchange Group, they run the exchange where you're doing all of your trading. So if you're trading S&Ps, or you're trading crude oil futures, or anythings, this is the exchange from which those are trading. Does everybody understand that? So again, I don't own the group. They're not endorsing anything that I'm saying. I want to go ahead and say all that just so that way, obviously you know that. But what I wanted to do is I wanted to use some of their education. And, look, when I say it, you can take it with a grain of salt, or you can say, oh, that Novak's trying to sell some software. The exchange trades almost $5 trillion worth of product a day. A day. Do you guys hear what I'm saying? So I have to ask an initial question before anything else is, do you think the exchange that manages $5 trillion value worth of trades a day is going to tell you the wrong thing? I would hope not. What I want to do in this lesson is I want to show you some of the things that the exchange themselves tells you to do. And again, this is where, it's just old John Novak with Nexgen, and he's begging some poor old man how to write a plan and follow some rules. And what happens is you guys are really losing sight of what's important and what's proven and what's true. And again, one of the first things that the exchange themselves tell you that you should do is you should build a trading plan. Okay? And again, they go through a whole bunch of stuff, and they say if they throw out some quotes and some good stuff. And, the short version is right here, you need to answer this question for yourself. Okay? And again, it's not up to me to answer this question. Who are you? What do you want? Why are you here? Right? You want to trade, you want to build a plan, you want to be successful. I'm assuming that that's the reason that you're here. And, again, we talk a lot about the plan, and we refer to our plan, but there's a bigger plan too. And, you have to have a plan for your business, like trading as a business. And you really need to think about when you take what Nexgen has done. And again, look, let's look at it. I've written a trading plan for you. I've basically put together all of the rules, the reads, the when you cans, the counter trend trading opportunities, examples of all of trades, and then ultimately how to do even extra with our market flow or our market flow automated strategy. You have to go in and you have to go in and define your objective. And you also have to kind of take our stuff and say, what's my methodology going to be? For example, Justin just said, I don't really do counter trend trading. I trade with the trend, which is fine. So what's your risk management going to be? What's your strategy going to be? What's your trader's log going to be? And again, I don't want to go through too much of this, but one of the very first most important things that the Chicago Mercantile Exchange Group says is you have to have a plan. You guys can go through, I've got each of these on our, believe it or not, I actually put all of those in our trading plan. Just in case you haven't seen this yet, there's a lot of these courses from the exchange that I put in our plan so that way you can have, kind of easy access to some of these things. But I just wanted to talk about them real quick. The other thing that they talk about, and again, you guys can do these courses on your own time, but they talk about the importance of self-confidence. And that self-confidence is one of the most important qualities you can have in order to become a successful trader. And, again, the idea behind, and again, I want you guys to read this and you guys can go through this, but, they have a short version which is developing self-confidence. And they say it's not easy to develop, especially for a novice trader who has not yet experienced success. So, again, there has to be two key factors for developing confidence. I'm just reading. The willingness to persevere through difficult circumstances, and then the ability to look at yourself critically. This number 2 part is where I come in, because you can rationalize any way that you want on God's green earth. But, and again, I got an email from somebody who rationalized why they can't do the education the way I wrote it out. And they rationalized why they can't do this. And they said, here's why I can't do that. And, they're lying to themselves. When they say that they can't do that, they're choosing not to do that. And again, you have to decide whether Nexgen fits what you want or not, or helps you get to where you want to be. And that's kind of the journey that we're taking together. And you also have to have the courage to fight back when you're losing. Think about it. Study data until you've conquered it. Take action when necessary. Look at yourself critically. Improving on your weaknesses. Avoiding arrogance and self-pity. And again, these are all the things that you need. I'm not going to go through all of them, but you guys can look through those lessons. One of the other things that they talk about a lot is emotional intelligence. And, again, they spend a lot of time educating you on why you're losing. And most people don't actually use all of these free resources. So again, I'm just kind of making you aware of some of these free resources. But, as you guys understand, you can go through the whole thing. But look, we want to be happy and we don't want to lose. I mean, that's the short version, right? We don't want to lose. We want to be happy. We want to make money, blah, blah, blah. And, the whole thing is, again, developing this confidence and intelligence through a lot of practice. They also talk about, in their trading psychology section, qualities of successful traders. Right? I didn't write this. So, again, think about it. Commitment. Obviously each of you guys has made a time and a financial commitment to be here, which we appreciate. Introspection. Again, when people tell me this is the way it's going to be done, this is the way I've always done it, and I'm 70 years old and I'm still a failure, but I'm going to keep doing it my way, I have to kind of question some of the motives when, they're not really looking into maybe what they could do better. And again, look, self-control and heightened awareness. We see this with our counter trend traders a lot. They just trade and they trade and they trade and they trade, and they have no self-control. And again, we talk about how many, different things have I put together, when we talk about things like, there's so many of them, but, bottom line, look, when you will become a winner, and this is a little sheet that I put together, by taking the same looking trades every time without a fear of loss. So you guys have to kind of define for yourself what's that look and what are you guys going to be doing. We talk about it a lot. Self-control and heightened awareness. Think about this. This right here to me is where we talk about you either follow the rules or you don't follow the rules. Right? You're either following the rules or you're not following the rules. And again, we've got very specific rules, and we show you guys how to really work through your trading plan. Being realistic. Realistic goals for us. Think about what we actually say. When we talk about in our trading plan goals and objectives, we're talking about trading highly leveraged instruments and being able to trade $3,000, which is a very low amount of money, and to be able to daily have the potential to extract out $400 a day out of $3,000. That's pretty darn specific, don't you think? That's really on the verge of unrealistic. But you guys know that you've had our software long enough, it actually is very realistic. And again, you have to also have these other qualities, which I didn't write this, guys, by the way. This is from the exchange. You have to be patient. Instant gratification is rarely achieved. The people who start trading live money 2 weeks after they start learning, they're trying to get instant gratification and trying to get something that's unrealistic. So, when I come down on people saying, hey, you don't even know the rules, stop trading live money, you're not being patient. You're not being patient to get through the education. And I make it very clear it's going to take you months to get really comfortable through the education. And, again, how many people skip that patience and start trading live and start losing? And what happens is you start a negative cycle and then you got to start over, and it's just, the other thing that I think we do the best job about, period, maybe better than anybody out there. If there's somebody better, I want to know who it is, to be adaptable, because our software is so dynamic and we're able to change and handle all circumstances in the market. We have a set of rules that we can trade the edges when it's choppy, and we can trade trends when it trades, and when it's really strong, we know what to do. Very, 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 very few times do we not have a rule that says do a trade or stand aside. I think we've seen pretty much every possible scenario. And then look, this one comes with, the losing traders all blame somebody else. Every losing trader. Well, the market did this, or well, I missed that, or well, somebody didn't something, something, something. There's always a reason why somebody loses. And it's never, I didn't do the work and I didn't study enough. It's always somebody else's fault. So, again, look, creative thinking, I don't even think you have to be that creative, right? Look, we've got everything written out. You don't have to reinvent the wheel. When people go, well, I'm going to do your education the way I think it ought to be done, instead of the way I've laid it out, and again, do it my way first, and then if you want to change it later, that's fine too. That's kind of why you pay for software. Self-confidence. This is something that you don't buy self-confidence. You have to earn self-confidence. And again, I think, The traders who've been around long enough know they have self-confidence because, look, I know, and again, we talk about this every day in class. I'm going to be a winner by taking the same looking trades every time without fear of loss, which is the very definition of trading self-confidence, isn't it? If it does this, I'm going to do that, and I'm going to do it 100% of the time no matter what. We talk about it every day. So, again, the exchange kind of, they say the same thing. Then they go in a little further and they talk about mathematics of trading success. And you have to understand what your winning percentages are. You have to understand, and you can go through this all you want, but you have to understand how frequently you win, what's the average size of the win, and you have to win more than you lose. Either a bigger winner size or a bigger winning percentage. And if your mathematics are off and you don't have a winning system, no matter what you do or how confident you are, you're still going to lose. And again, this is where we go in with our spreadsheet and we say you need to practice your rules live, and then you need to go replay your rules and practice and replay and practice and replay. So that way, after the course of, 50, 100, 200 trading days, you can say, look, by the time you get to down here, right, 12 weeks into it, you can say, I know for sure I'm going to win, and you'll have the number, right? When the look looks like this, and I have all the rules met for a trade, I have a 75 to 80% chance of winning 20 ticks. And until you have that mathematic in your head, it's just something that some guy in a chat room said that you're not sure you believe. This is why the mathematics is really important, that if you don't know the mathematics of your plan, you're probably not going to ever achieve it. The other thing that, planning for trading losses. And, again, everybody loses trades, period. There's no such thing as 100% winners. So, if you lose money, get out, right? The Chinese proverb, if there's a hole in your boat, don't drill another hole to let the water out. And again, this is where we talk about in our plan, making $400 a day, right? Or if you lose $300 in a contract, stop. Stop for the day and go back and lick your wounds and figure out what you did wrong, or if you did anything wrong. And, again, in the plan, we also talk about if you have a $3,000 account and you've proven that you will never lose more than $1,250, then you're ready to start trading money. And if for some reason you actually lose $1,250, stop. And then don't lose any more money. And the internet is littered with people who've lost 20, 30, 40, 50, 60, 80, 100 grand. And it's because they just don't stop. They drill more holes in the boat. They double down. They do crazy things. And, again, you have to plan for some losses. And this is where the spreadsheet is also going to help you out a lot. Because, number one, you'll know the trades where you shouldn't be taking losses anymore because you're going to see them and you're going to document them, and you can make them red or green as you see fit. Do whatever you want to do. And you'll eliminate the trades that break rules, and you'll only focus on the really good, perfect trend trade looks, and then you'll end up with a really high percentage. So when you do lose, it doesn't destroy you. Right? You lose 10 ticks or 6 or 7 ticks, and then you move on. Small losses, big wins, and then you end up making more money. And then ultimately, I think, Justin, you went through this, or going through it now, making it real. And again, everybody knows the same thing, that, when you go from paper to real money, you're going to lose some of your profits, right? So, again, they talk a lot in here about some things like who are you? Your personality doesn't influence what you do, it influences everything. And again, they talk about in here, do you want to trade with the trend? Do you want to trade against the trend? It really, you have to, and again, this is where I also talk to you guys a lot about what do I say? I say you need to learn the software and what it says and what it's okay to trade, not okay to trade. Simulate your trades, and then you have to simplify in your plan for yourself what looks, feel good, and are easy for you to do. They have to be yours. And again, I'm not asking you to write the rules. I'm asking you to figure out which components we teach fit your personality the best. So you have to make it your own, and you have to understand what trade works for you guys. Right? Think about it. Number one, you have to have goals, right? And then you have to have your strategy. So what's your motivation, guys? And again, everybody, look, it even says here, it's kind of funny, because we always ask people, what do you want to do? And they're like, make money. And it says, to make money isn't the answer. The exchange says that. It's not personal. Why do you want to make a lot of money? Because I'm fearful of running out of money in my old age, because I want to have my grandchildren go to Harvard, whatever. I want Lamborghinis and yachts, whatever. Are you motivated by excitement? What are you? So I want you to think about this. To develop your trading plan, you have to think about what it is that you want. Risk. Again, look, everybody has a little bit of a different risk reward profile in their personality, right? Some people can trade 2 contracts and some people can trade 50. So, again, opinions on risk vary, but, again, some traders think of the market as a hot potato. The longer you hold your position, the greater your chances of getting burned. And again, this is where a lot of our traders, they take the money and run. 20 ticks, 20 ticks, 20 ticks, 20 ticks. And that's kind of where we cater to. Not that you can't take longer trades or make bigger money, but we really cater to high probability, take the money, run, reward. What are your targets? Think about it. Don't we have targets? Every day we want to make $400 a day on one contract. Now, put your trading plan together. Every trader's plan is unique. It's based on your personality, your strengths, and risk tolerances. I'm not your mama. I'm not your spouse. It's not my job to write your plan for you. I've done the basics, which is to put together the objectives of what's achievable and to put together the rules to get there, but you still have to go in and make it your own. Awareness. How do you respond to different market conditions? So, and again, I want to even go back to our trading plan, and I want you to see this. Look, here's 4 different videos of trades from 4 different days that will give you the spatial or contextual awareness, whether you should be trading range bound, tops and bottoms, whether it's a strong trend, how do you handle those different types of trades, right? You have to form your strategy. Think about what this is, the exchange telling you this, guys. This is not me. This is what they say. Now that you've got a management tool to develop your strategy, do you trade with momentum or against it? Trend trades or counter trend trades? If you trade against the trend, when do you take advantage? Do you try to get in at the top, or do you wait for the trigger lines to roll over and have a confirmed reversal? Didn't we just go through that when we talked about this? under this super strong condition, it's better to wait for the triggers to roll over and then you don't get run over. And if the market contextually is not going really fast, then trading from the edges is a lot easier with the trend. So it's the same thing, what they're talking about. How are you going to treat trend trades or counter trend trades in your strategy? If you're a directional trader, would you rather base your strategy on volatility movement? Do you always need to be involved, like Mike Hunt, right? Mike loves to be involved all the time, so he has a strategy that gives him 6 or 8, 10 trades a day. That's fine. More mechanical or automated or seat of the pants? I mean, we already know the answer to that one, right? And then ultimately, the exchange suggests that you optimize your trading plan. Well, how do you optimize your trading plan? You have to first track your trading plan. Doesn't that make sense? Before you can optimize your trading plan, you have to know what your plan is. Trader tips. Think about it. I'm not saying this again. And again, look, they don't endorse Nexgen. I'm not trying to say they do. I'm just trying to say they have some basics that, again, I try to fill the gaps with what we do. So, look, they tell you what to do, right? Be prepared, test your skills, have a trading mindset, do your homework, patience and practice. Make the time to study, develop your plan, measure your performance, track what you're doing. Does any of that sound familiar? Sounds familiar, doesn't it? So again, look, when we talk about what you need to do, look, Nexgen's component of this, think about it. Our component is to teach you the trigger lines and fibs and the rules for when it's okay or higher probability to take a trade. And then your job is to simulate your trades every day and post your pictures in class until you're sure that you have the correct read of the software. 97% of you just sit there and think you're about to magically get it. Just about to get a couple more months of watching videos and you're going to get it. You become a better trader by trading. You become a better trader by tracking your trades and eliminating what doesn't work and adding to what does work. And again, look, this is proven stuff, guys. It's not me making it up. So, again, I think Nexgen does a really good job of filling in the gaps. We've spent 25 years putting together analysis software for you. Right? Fibs and triggers and market flow. And we've spent, the last 15 years defining these two trades as well as we can possibly define them. Trend trades and, trading from the edges. We've defined trade management for you and when to reduce risk and how to manage your risk and how to really even get in with only, $100 risk. And we've given you example after example after example after example. So, again, the things that we tell you to do, and look, I've added in one more picture on here just because obviously yesterday's scenario. What do I need to write on each chart for class? So I've added in a new little picture, which you guys will remember this one, right? And again, what does the picture say, guys? The picture says when you take a trade, look, you don't have to do anything magical. You take a picture, you write a little box, and you put 14.2 transition look. And you write a little box, and you put 8.2 small triggers above. And then you write bought at fibs and mid bands with the triggers. That's it. You don't have to write a dissertation on why you're doing it. You don't have to know how to type fast. You can put these things in a text document and just copy paste, right? I mean, look, you could go like this and you could go to your chart and you could very quickly go F12, paste, go. So to tell me that you can't type fast enough is just another excuse on why you can't do something. Copy paste it in. So here's our last 2 days. And again, look, everything over here on the west coast of Florida is fine, Sal. Thank you for asking. So, but here's the thing, guys. Just because somebody gives you a plan doesn't mean you're going to be able to follow it. Just because somebody teaches you a rule doesn't mean you're going to be able to follow it. So it's in the practice and execution of the plan that you're going to really get better. And again, you have to be able to also look at the condition and say, too strong for long, and I'm going to wait for the trigger lines to roll up, the synthetic triggers, and look what happens when they do. Long trade, long trade, long trade, long trade, long trade. Maybe take a break at resistance, and then it breaks through, and then it's long trade, and again, still we haven't rolled over yet. So was there a long trade or two to be had in here? That's the question. Was there? Was there a spot where we had fibs and triggers coming together on the smaller chart? And again, look, I want to show you guys one more lesson, okay? And again, look, watch how simple this lesson's going to be, okay? I'm going to do something that normally we don't do, but I've done this before in a past lesson, and it seemed to have worked out pretty well for people who are struggling with the concept of trend trades, okay? So again, look, I'm going to do this lesson real quick. We'll go back. And, again, look, I'll pick a random day going back. Okay, so we'll go to 8:15. Okay, 8:15, here's midnight, and I only want one thing, guys. I want small triggers crossed up above the large triggers, or at least inside, and I want a tail. So again, I want to make sure that you guys understand the concept of what I'm going to be drawing circles on. Does everybody understand this simple rule? Small triggers down, at least inside or below, or crossed up and above, and if we have a tail, I'm going to put a circle on there. Mel B, do you understand this? Because we're going to go through and we're going to take a look at trend trades. And again, this is kind of the first step for a trend trade, isn't it? We need to have a tail with the triggers going up or above. And again, can I just do this quickly? Can you guys all see where I'm drawing my circles in? Again, pretty consistent. Just tails with the triggers going up or inside, and then ultimately both crossed up or down. Can you guys see where I'm drawing the circles okay? I just want to do it really quickly so we don't drag this out for 6 hours. Tails with the triggers going in my favor, both of them. Alright, so, and again, there's going to always be a couple here or there that, I'm going to miss, but I'm doing this really fast for the purpose of showing you, basically 2 or 3 weeks worth of trend trade study here very, very quickly and very... Alright, so all triggers are up. We'll throw it in there. And again, look, there's going to be losers in here, guys. These are the winners, okay? Fair enough. I mean, look, if there was a tail and it went down, it was a winner. So we're going to go with the assumption that these are winners first. The rule is both triggers are down and you get a tail, Larry, on a 14-2 chart. Both triggers are down and you get a tail, or you get a tail. Both triggers are up and you get a tail, or maybe even a 1 bar. So you get it? Both triggers are up, both triggers are up, both triggers are down. Easy enough. Small triggers below. And again, you guys see what I'm doing. I'm whipping through this like lightning quick because the idea is we're going to go in and we're going to go find ourselves the trend trade rules on the small chart, because this is all you're looking for, guys. I mean, this is rule number 1 and 2 for trend trades. Rule number 1 is that the trigger lines look more favorable on the 14-2 chart, meaning, you know, they're crossed up or crossed down and they're in a good spot. Goodness gracious. And again, eventually you're going to roll up and then they're going to both be up. So if they're both up, we'll look for longs. Everybody okay with this? Super, super, super simple. Milby, are you okay with this? Triggers going down with the tail. Triggers going up with the tail. And again, look, now let's go back to the 15th. Bear with me here. And I wanted to go back to a random spot so that way you can kind of see it's the same thing every single time. So here's the 15th. Okay. This is where we started. I put the line on there. And again, we'll just start with the first circles, okay? Milby, are you listening? Give me a little Y in the room. We want, when we have a strong, so we're going to go in with the assumption that the spot we had the circle had a very strong 14-2 trigger line look. Okay, so we have to go in with just a simple assumption here first. Is everybody okay with this assumption? Because if you don't have this assumption, you know, again, we have to obviously pay attention to termination conditions and management and things of that nature, but for the most part, we're just finding trend trade spots. Okay? So we're going to go in with the assumption that every time there's a circle, we have a strong look on our chart. And again, when are we going to get in? When are we going to get out? So again, you know, here's our circle, and we have to ask ourselves the question. You know, look, I want to just kind of refocus people's attention here. When you get to a trend trade spot, do you have fibs, mid bands, yellow 1-to-1s, which are very helpful for trend trades, or trigger lines all at the spot? Okay? The more you have at the spot, the better the area is going to be. So again, the first two indicators that we have are fibs and mid bands. And almost every single person who has our software for more than any amount of time says that if you have a yellow dot at your trend trade spot, it's really, 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 really helpful. Again, does everybody understand that? So we don't have triggers here. We're kind of in between the triggers, but again, obviously very strong conditions. So again, could you have gone short? Could you have made money? Where would you have gotten in? Where would you have gotten out? Would you have managed it? We're not going to get into that half of it yet, but I just want you to see the trades themselves. All right, the next circle. We want fibs or mid bands and triggers to come together. So again, we have to kind of look at, we're looking at the 14-2 chart for trigger cell. You know, again, look, I don't want to make this really difficult because it's not. Okay, the rules for a 5-1 trend trade are as follows. The 14-2 chart must have good triggers. Agreed? So all we did was we drew in a bunch of circles where the 14-2 chart had good triggers. And then we want mid bands, fibs, fib to fib oscillator on the 5-1 chart to tell us where to get in. So it's a combination of two things, Sal. The condition of the triggers on the 14-2 chart, again, which we've talked about, but you can see them again. What's the condition? The condition is small triggers above or inside and a tail. We okay with this? So these are the circles with the look, with the tails that we're trying to decipher on the smaller chart. So that's what we're doing. Where was the circle? And did we have an easy trend trade short? Red background, mid bands, triggers going down. Could you have gone short here, or would it have been better to go short at the red line? Again, look, somewhere in this window is our window, right? Then, again, we're not going to take into account the fact that we have every fib on the planet. So realistically, this one's probably not going to happen, right? So as we work our way forward through our charts, we want what? You can see the background color changes. And what do we want for an entry, guys? And again, you have to think right edge of the chart. Your entry is going to be over here. Agreed? So you have mid bands, fibs, 165 EMAs, everything comes together right there. So that's your long trade. And again, if it doesn't turn red on you, then you're going to be fine. We won't get into management too much. Now look, I'm not saying that there aren't more trades. There's a lot more trades, but these are the only ones that had tails on the big chart. That's why we had a circle on them. So does everybody see where the trend trade is at the mid bands, fibs, and triggers, with assuming we had a good condition? Now, this is where the trick comes in with, our software. And again, this is where most people get tripped up in the beginning. Bear with me here. Let me pull up our... And again, I should say this every single day. Here, bear with me. In the software user guide, the only difference between a high probability trade, and again, when we talk about high probability, what are we saying? We're saying that all of the charts and all of the indicators line up and say the same thing. Relatively the same thing at the same spot, right? That's high probability. Low probability is when you have a low chance of winning a trade first, but traditionally you're going to see the great trade set up on the small chart, but the large chart hurts your chances of winning. This is why new traders that only stare at their small chart do short trades here and end up losing. Because on the small chart, that looks like a high probability short, doesn't it? This is why we don't just look at our small chart. We look at our large chart, small chart. Because the large chart is going up really strong, which means that our mid-band on the large chart is going to terminate the trend. Which means if you do this trade on the small chart, which is low probability, you end up losing your money. And only when you have the large chart, small chart coming together, and again, I'm not saying that there's not additional long trades you can do, but just the one we had circled. And again, it's the same thing every time. You have to have a strong enough push on the big chart to have big momentum down. And when you have big momentum down, can you see where the trend trade short is on the small chart? If you look at the small chart first, you will become confused. You will end up doing low probability trades. Only when you look at the strong large chart will you then be able to find the correct high probability small chart trend trade. This is why I drew in circles on the high probability trigger line looks. Is this pretty easy to look at when you look at the simplicity of it? Strong triggers on the big chart, perfect setup on the small chart. This would be a high probability short trade. And again, I want you to see the difference. Look, it's the same trade as over here. Look, see where I'm drawing in all these squares? It's the same fibs, it's the same spot. The difference is the large chart set up here. And this is where, the difference between, the large chart set up, but you had a perfect short. And then over here, the large chart set down. Do you guys see the difference? And that's the only difference between these two spots, because technically on a small chart by itself, this spot and this spot are freaking identical. Do you guys see what I'm saying? So you go from low probability perfect looking trend trade short that loses, or maybe you manage it and get out, to long trade, long trade, long trade winner. And then you get up to, usually the edge of fibs or a pivot stop out, something big that terminates the trend. And then the momentum starts on the big chart. And then when you have large chart momentum and a 5-1 trend trade rules, then you have all of a sudden a magical high probability short trade that pays the bills and you don't struggle through. Larry, we've already been through this twice now. We have circled the spots where the large chart says up or down. If you want me to go back to that one specifically, this is why it's important to write on all of your charts. So here you go. Circles, Hillman. These circles, I've already written it on here, guys. These circles represent the spot where we had a strong 14-2 trigger line look and a tail. So anytime you had strong triggers and a tail, I drew a circle. Easy enough, Hillman? Strong triggers and a tail, circle. Strong triggers and a tail, circle. And again, there's videos to this, but look, the idea is with our trend trade rules is to have the 14-2 chart with the correct trigger line look. Again, look, I put a picture together. This is literally directly right out of the trading plan. Hang on, let's see what we got. So in the trading plan, the rules say you must first have the 14-2 chart areas and triggers say it's okay. So that's kind of what we did with those little circles, is we just highlighted some good triggers and tails. Second, which we're not doing today, you do this live and you do this with your practice and history, we have these conditions which will terminate a trend, which means you won't do any more trend trades on your small chart. So if you have a good trigger line look and you're not yet at a stopping spot, then you will do pullbacks to your 5-1 trend trades. You okay with that, Hillman? This is all there is to a trend trade. And again, I say it 5,000 different ways, and I have almost the same identical video on, but look, we're looking for the right look on the big chart, not a termination spot, The 8-2 chart does help. We're not looking here, but and then we want to find our mid bands and fibs and fib to fib oscillator with a green or red background. And then when we get that, so look, large chart was not strong triggers down. So all I'm saying about this spot right here is this trend trade in the box, as far as the fibs and the little triggers and everything else, looks identical to the one over here in these 3 circles. I mean, look, it's literally the same fibs, it's the same triggers, it's the same look, it's the same fib to fib oscillator at 75. They're identical. So what's the difference? The difference is the large chart said this one's going to work and this one's not. Everybody give me a Y in the room that you understand that. Really important that you know this. So when and where does the large chart say it's okay to do this thing? And again, when you go back, I'm not saying that there's not other trades, because there is, but again, this is where the large chart said up. Right? So when the large chart says up, we start looking for trend trades on our smaller chart. And basically, as long as the large chart continues to say up, we continue to do trend trade longs until the cows come home. Then when the cows come home, right, red background, pivot, stop out with divergence, we stop. Anyway, the short version is, when are the triggers so strong on the big chart that we get a trade? Down from mid bands, up from mid bands, up, large charts going up, large charts going up, large charts going up. Again, all you need is 20 ticks a couple times a day, guys. And when you go back and circle how many times, again, look, this is another one. We didn't put this area on as a high probability large chart because it didn't have the right trigger line look. And this is where new users go short and they lose their money every time. Usually when this one fails, you know what happens, right? We've already discussed that. But there's extra trend trades that aren't going to be on here because they don't have the 14.2 helping. So as you go forward in time, and again, sometimes you have to wait for a few hours for everything to come together, then you start getting the right look. And when you get the right look, it always looks the same. It's mid bands, fibs, triggers, plus the large chart saying it's okay, and you end up with the right trade. Does everybody understand that? And again, that's just the rules, guys. The rules are 14.2 chart says it's okay. You didn't turn it into a termination spot, right? So triggers say it's okay. You did not hit a termination spot. And then on your 5-1 chart, you get a pullback to your mid bands, fibs, or triggers. David, I know you had stepped out, and again, I won't repeat it. All I did is I took the large chart and I said, where do we have a strong trigger with a tail? So we could show people how to spot trend trades. And again, it's, what is it going to take to get the rules in your head? Go back and draw in 100 circles on your chart and go back and find where the rules are met for a trend trade. And then you'll see some extras that, again, there's nothing wrong with seeing a couple extra opportunities. Edge trades after gaps close, maybe some trend trades after that. But then, the thing that's really vitally important is that you see the really high probability ones. When everything on every chart comes together for a very, very high probability trade, You've got to take advantage. And again, if it doesn't quite line up, you don't worry about it. And again, I think you'll start to see as you go back and you're studying, your charts, there's a lot of opportunities that, sometimes you're going to have to do that trade once, and then maybe you do it twice, and then you end up not doing it. And then you have to wait for conditions to change and to get through fibs. You may not trade into that many fibs, but again, what's the trigger line look on the large chart going to be, guys? When you're pulling the trigger right here, what is the look on the small chart, the big chart, the 8-2 chart? Once you get the look right in your head, and again, this is why I beg and plead and beg and plead and beg and plead, track your trades, take a picture of the 3 charts, and when you have the right look, meaning strong small triggers that are transitioned above the others, and your 8-2 chart says your triggers are okay, when you end up buying your fib and mid band in the real world, real time, on the right edge of the chart, you're going to be confident. When you do it 1,000 times in a row on simulator, you're going to be confident in the real world. If you're not following the correct rules, no matter how many times you do it, you will never be confident. It is important that you follow the rules. If you do not participate in class, how do you know you're following the right rules? Some people can do it and some people make mistakes. And if you allow yourself to make mistakes for months at a time, when you start trading real money and you take a couple losers, it's going to shake your faith. You're going to end up with this. And again, I have these little things written for everybody. But look, when you trade the wrong rules on simulator and you have winning trades, you're going to become very brave. Because number one, you don't have the financial stress of, whether you win or lose. When you switch to real money, and if you guys have not yet ever traded real money, you will know what's going to happen. You're going to have an adrenaline shot that's going to run through your body. Your hand's going to be shaking. Your stomach's going to be queasy. You're going to be like, oh my God. It's like going down the face of a roller coaster at full speed, and it's just $100. But you don't want to be wrong. And what happens is you're going to end up losing 4 or 5 of your first trades because, number one, that's just the way the market works. It doesn't matter. If you waited until third day after a holiday to go live the first time, you're going to lose your first 2 trades real money because the markets are evil and they're watching you, and you're probably going to make a mistake because you're nervous. So, again, it's through this relentless repetition of the same thing and the same look and the same pictures and the same thing over and over and over, and the same rules for when to stop doing 5-1 trend trades over and over, and through the relentless same conditions like, we talk about every day. Don't go short counter trend trades, and if it's going up strong, wait for it to roll. All of the things that we go through on a daily basis are designed and practiced and learned over the last 23 years we've been doing this with Nexgen. Think about it. That's a long time to be doing the same thing. So, again, I started this whole thing out with, it's not me saying it. The exchange, which trades, $5 trillion worth of contracts a day. I mean, I don't know about you guys, but I think that's pretty freaking impressive. The exchange says have a plan. The exchange says practice that plan. The exchange says know on simulator what your profit and loss are going to be. The exchange says all of the same things I say. You don't believe it when I say it. Hopefully you'll believe it from the $5 trillion a day in execution company. Now, what has Nexgen done for you lately, right? Nexgen has built the plan. Nexgen has built the rules. Nexgen has built the nuances. Nexgen has the training so you don't have to develop your own methodology. If you wanted to go develop your own methodology, you could. I'm pretty sure most of you are very competent people. Take your time and spend the next 20 years developing a good methodology. No, you don't want to, right? That's why you pay me. So you pay me for software, and you pay me for rules, and you pay me for making sure that you're hopefully following the rules, or at least exercising the rules correctly. Now, some of you don't like the obvious. When I say you're not following the rules and you're not doing it correctly, I get a slew of excuses. Well, I don't learn that way. Well, I don't do this. Well, I don't do that. Well, I don't, I understand that, if you're going to be part of Nexgen, I only ask one thing, guys. Just do it my way one time first, and then if you find a better way, or you find something that's easier for you or more profitable for you, share it with me. Maybe we can make our education better. Maybe I can do something a little bit better, but until you figure out a better way to do it, why not do it the way it's been done for years that people apparently seem to be pretty successful? So here's what I need from you. I need you to do a trade, and I need you to write on the chart 3 simple things. What was the look of the 14-2 triggers? What was the look of the 8-2 triggers? And where did you get in? Name the support or resistance areas that you got in from. Is that really a lot? That's not a lot to ask, is it? All I want is one little picture with why you did what you did, and it can be super, super short and sweet. All right, Sylvan, let me take a look. And again, looks like you were going long, and you made a bunch of money, and then you went long, you added on, and then you got out because of a red background, which is fine. Obviously managing your position tightly because of the red background, and usually a red background and pivot stop outs would go a little bit lower, so nice job. Obviously we did go a little lower. And then Justin, and again, look, I want you to think about what trade would you call this? If you get to 55.40, what would you call the trade? What's the name of it? Because it's not a trend trade long. And I'm not sure if it qualifies as an edge trade. You cancel the trade, okay. Pivot stop out at divergence with a red background, waiting for the area to break or to go lower, which I think is the right read of the indicators. Cool. And again, look, here it is, pivot stop out with a red background, and we went down. And again, the trend is up. Can we agree? I think we can agree the trend is up. So we have a condition at the moment that says we're not going to go short, right? And again, this is the one thing that we didn't deal with because, if it was only trigger lines, you'd be looking at these 2 triggers thinking, yay, I'm going short. Right? This is a transition trigger to the downside. Agreed? Small triggers are getting below the others, large are crossed down, it's a transition trigger. The problem is we've hit a termination spot. Right? anytime we reach the edge of multiple time frame Fibonacci support, short trades are lower probability. Right? We know this because of our plan. We know this because of the picture in our plan, which, again, you have to study these so you know what the looks are. I don't know how else to say it except go back and find 100 of each of these and you'll feel much more comfortable with them. But, we look at them live as they happen every day. I put them in the spreadsheet for you guys as well. Look, I even highlighted them in here. I think I'm going to redo some of the way this is laid out so it's even extra easy. But look, when to stop doing a 5-1 trend trade. If the triggers are weak on the 14-2 and you have fibs and divergence on the little chart, stop doing 5-1 trend trade shorts. If the triggers are going down again and you break fibs, then you can do 5-1 trend trade shorts. Easy enough, right? Almost every one of these is the same, but a little different. If you're in a transition and you hit fibs on the small chart, don't do any more short trades. If you're breaking through fibs on the big chart, you can do the first one. And if you get a pivot stop out or you don't break the fib by changing the color, don't do the second one. I think that's pretty easy, don't you? Yes to the first one, no to the second one, which is pretty much the same theme across the board. Yes to the first one, no to the second one. Right? Trade to the fibs and then no more, maybe an edge, but then wait for the next one. And again, it's kind of the same thing over and over and over again once you get used to the pattern. Weak triggers on the big chart, double fibs, pivot stop outs at fibs. It's enough to stop doing trend trades on the 5-1. Again, it's not that you'll never do a trade. It's a 5-1 termination condition. Sometimes it's a big trend termination condition, but more importantly, these termination conditions in this picture for the 5-1 trend trades are when to stop doing 5-1 trend trades. Not that the trend will always reverse 100%. It's just, you need to look from a bigger area, bigger retracement. All right, Cisco, let me take a look. All right, so 5 triggers past divergence. You bought a pullback to your mid band. It went a little bit farther, but you made a bunch of money up towards Fibonacci resistance. Perfect. All right, that's okay. You see at a risk a couple extra ticks. And again, this kind of goes back to, what I told Justin yesterday. Justin, do you see this picture? Again, I don't think it's really a bad entry. You just, because of the strength, he decided to risk a couple more ticks. But just, this is a very similar look, isn't it? Just a mid-band. Here, let me even take a picture while we look at this here. Again, this is a very similar thing that happens a lot. And again, it goes to the strength of the small triggers and only a mid-band here. Is it going to go from there? Is it going to go a little bit deeper? And again, traditionally it goes a little deeper. Again, I love the yellow 1-to-1s when they're involved with a trend trade. So I'm assuming with Cisco's confidence that he said, hey, I know that this 1-to-1 is going to really be a good helper. I'll move my stop a little further away, and then he was able to get rewarded for it. And again, I think the whole thing, look where it started. It started over here. The trigger line condition on the large chart was such that there's no way he's not going to feel confident taking a trade. Could have done maybe a little bit better, but whatever. Could have maybe even added on right there and got double paid. Just saying. Anyway, food for thought. Nice job. And again, look, you're never going to be perfect, guys. Perfect is for dreamers that don't have any clue in reality. You need to have a perfect look and try to do the best you can with it. So, again, look, we're at a termination spot, which means no trend trade shorts on the 5-1 chart. So look at it. I want you to see. This is a trend trade short on the 5-1 chart. Agreed? I mean, it looks just like a trend trade, doesn't it? Mid-band, triggers, it's red. But because of this spot, we don't do that trade. Even if it wins, it's not our money. We want everything to line up. We want all the triggers, all the fibs, all the mid-bands, everything on the planet to go our way on both charts, or all three charts, which means you have to sit and wait, sit and wait, sit and wait. And I think that's probably one of the harder things to do with trading, right? To just sit and wait until everything says the same thing at the same spot. So, look, could we go down a little further? Sure. So let's say this is a whole window right here where we could go down to. We have to ask ourselves, if this window holds, where are we going? Right? Where's the next major fibs to the upside? And then ultimately we have to, then ask ourselves, what do we need to see from the trigger lines to tell us it's okay to buy again? So, call it a very strong support in an uptrend. Now we are waiting for rules. Right? There's always two sides to the coin. The first side of the coin is we're waiting for this super support area to hold and then give us long trades. Agreed? I mean, that's kind of, what we're really looking for is some kind of long trade off of here. Now, in order to get a high probability 5-1 trend trade, is this the right trigger line look for it? Not even close, is it? I mean, it's so not even close, it's ridiculous. This is a pretty good look on the 8-2 chart for long trades. This is a pretty good look for the end of the trend at the top, or at least a deeper retracement. Again, look inside the plan. I'll show you the plan. Never hurts to go over the plan, does it? In the plan, watch these two pictures. I want you to see these two. If all the triggers on all the charts say up, then the support usually works. So theoretically, this is the support we're at right now live, and then we're waiting for everything to roll up. Or it could break. And again, look, this is what we had going up. We had really good 8-2 triggers going up, and there were some opportunities for some longs. And then ultimately the triggers got inside and got below, and we made a deeper pullback. And again, look, it's not that we're going to never go up again. The anticipation based on the big charts is we're still going up. So usually you stop taking 5-1 trend trades and then you start doing edge trades or something like that. Again, this is where we ended up here. We're going up, but this spot right here said we're going down, which is fine. It just means don't do any more 5-1 trend trades. And then ultimately we're going to go down into support. Very strong support, multiple time frame fib edge support. And then ultimately, when the triggers roll back up and things turn green and all the good stuff, then we'll end up with a long trend trade over here on the 5-1 chart eventually. So you can see the very, very strong support has already made a case for itself, right? Starting to head in the right direction. So again, do we have on our 14-2 chart an ideal look for going long? Do you remember the picture? That's not the picture. That's not the picture. Where did I put the picture? Ah. Correct triggers on the 14-2. Make sure we don't run into something that hurts us. And then when it's all green, we'll do a long, or vice versa, red, short. So the very first thing, do you see it says first, correct triggers on the 14-2 chart? Do we have the correct triggers on the 14-2 chart for a trend trade? No. We did, right? Going up. Strong triggers with some tails. I mean, that's what we're looking for. Now we don't. They're going to work out their retracement here. And again, this is our support window. Who knows? Maybe they come back down here. Maybe they mess around. But eventually, only one of two things is going to happen. We're going to have a high probability long trade trigger line configuration, or we will break all of the support and we will start a new trend to the downside. Agree or disagree? Or they'll close the market. I mean, I guess neither one of those things. We could go sideways, but eventually it's going to break the box and we're going to go down, or the triggers are going to say it's okay to go long, nice and easy, and you're going to be able to take a high probability trade. So the rules must be met. You don't have to worry about anything if the rules aren't met. You just have to sit there and wait until they are. Now, somebody who was reasonable, who's had the software for 150 years, might have said, it's worth it to me to take a chance either from the lows, because I know the support should hold, or, again, you can start to see where maybe somebody might take some chances at going long when the background color turns green. Did anybody go long? Just curious. Again, it's not high probability look on the 14-2 chart, but that's just one trade, right? There's other trades that you guys are going to get when you know for sure. I am 100% confident we made a low and we will go up. Now, not guaranteed that it's going to happen, but the confidence of knowing how to read your indicators. When you're confident that you have made a bottom, you can start to be a little bit more assertive on some entries. Alright, so what'd you guys do? Let me see. Long at 48, 49, 51, 51. Cool. Nice job, guys. And again, look, unless you're confident that you've hit a bottom that's supposed to hold for sure, then you're not 100% confident in this long. Because we just had the speech that these are not the best triggers yet, right? So now you have to go in and you have to think about your trading plan And again, I think we've had this conversation with enough people that says contextually, if the market is in a very strong uptrend, do you have a definition for a very strong uptrend? And it's in a strong uptrend, and you test the edge of Fibonacci support without any triggers breaking through, can you then be a little bit more assertive with a long trade? Perhaps your plan will call for that, perhaps your plan will not. Do you guys understand this? It's not my job to tell you what your plan is. It's only my job to create the software and teach you how to read it. Can you guys see why at Fibonacci support, without any triggers breaking through, people start to get antsy and start to, again, I wrote it on here, very strong support in an uptrend. So we're waiting on rules to be long to go long. Or a breakdown, which I doubt it was going to happen, but all right, David, let me see what you got. All right, so you were long to get up there. And again, I see what you're doing, but, again, for me personally, double top with the pivot stop out with a red background, it's really hard to think we're going long, and then to compound it, you know what I mean? You basically did the same thing twice, and neither one of them won. And I understand what you were doing. And again, there has to be some semblance of a rule that if the triggers are really weak and XYZ happens, are you going to stop? Now, I can show it to you, but again, you have to kind of, you have to incorporate it into your thoughts and processes. So again, look, weak 14.2 triggers. And again, I think a pivot stop out with divergence, even without a fib, is probably enough. David, I understand, but you've ignored all of your other charts. When you have weak triggers on the 14.2, you have to start paying attention to the other charts. So you got hyper-focused on... And look, this is your 8.2 chart at that time. So look what had just happened if you use your 8.2 chart for filtering. I'm not sure if you do or not, but look. You had just had this happen on your 8.2 chart with the small triggers below. And then you went long again right here with this look. Does that look right? I don't think it does. And then we talked about, again, I can talk about it all day long. It doesn't matter. Look over here on this picture from the plan. Strong up, get below. It's going to go down deeper. And then small trigger, strong up above again, shallow pullbacks. And it kind of looks like above, pivot stop out. We're going to go deeper. Indeed, we did go deeper. Just so happened to be to the edge of fibs. And then when the small triggers were strong above again, people took advantage of a long trade. So I think you were pushing way too hard going long here and here twice based on the read of, the filter chart, the 8.2 chart. So your first one over here was cool. And I think very much in agreement with the 8.2 chart. And then long here. And again, I want you to see the visual of what it looked like. And what the result was. This chart did suggest we were going to go lower, which we did, and then hit the spot. And then now it suggests we're going higher. And again, now we're at a termination potential. We'll see what happens. Anyway, I think just maybe a smidge of a misread there. Not a smidge, a big misread. How's that? I'll commit to a big misread. All right. Questions? Anything you guys would like to go through? Bill W, let me take a peek. This is crude oil, and you bought down here at the low. Okay. So you bought the pullback to the fibs with the triggers rolling up, it looks like. And it looks like you were pulling your stop up as you were going. Hopefully, as you were getting to next fibs, you're taking money. Where'd you get out of that one? Did you get out at the fibs up here at 80? 65. Okay. I was kind of hoping for you to get to the 80. That's okay. You still made money. 40 to 65 pays the bills. Alright guys, if you guys posted in any other charts and I missed them, yeah, Bill, good. 2 trades, you're up 550 per contract. And again, this is what it's about, guys. It's, I said this yesterday and I want to reiterate it today. It's not about being perfect. You just have to be perfectly adequate. You don't have to get them all. You don't have to get perfect entries. You don't have to get perfect exits. The objective is to make $400 on the average per day per one lot. Even if you trade a couple markets, 400 total. You can make 200 on gold, 200 on crude, whatever. Couple trades, you're up 2 trades, you're up 550 a day. So look, you're up over 20% of the daily goal. It's perfect. You just have to do it 150 days in a row and then start trading live, right? And repeat it. And then this is why we tell you guys, look, this is the process. You have to learn the looks and the setups for when it's okay to trade, when it's okay not. Simulate during the day and post your pictures in class. And more specifically, I added this. Specifically, write what the trigger line look is on the 14-2 chart. Specifically write what you see with the trigger line look on the 8-2 chart. And then specifically write the areas and reasons why you got in on the 5-1 chart. When you write these 3 things out, you're going to start seeing a pattern on trades that you win and trades that you lose. And when you get the winning trades, again, I've said the same thing 5 million times. When are you going to do the trade? Why are you going to do it? Where are you getting in? Why are you getting out? Granted, this one doesn't have 3 charts, so I have my own rule broken here, but you guys get the idea. And you could just write trend trade short. You don't even have to get too fancy. Edge of resistance, pivot stop out, trend trade short, Look, once you know the rules and you can do a lot less work. You can take a quick picture and say, rules are good, rules are bad, all 3 charts, done. If you lose a trade and you break the rules, like, Milby, this is why you lost your trade yesterday, the second trade. If you have a fib and a pivot stop out, if you go long below that, you typically will lose that trade. And if and this predominantly is what happens when new users stare at their small chart and see the trade, but they ignore what the big chart says, which is stop taking your trades. This is a very, very, very typical thing for new users because the triggers are all going up. So on the small chart, it's going to look perfect. And again, it's that small chart that'll get you. And I think, again, I love this definition. I'm going to bring it up one more time just so you can see it because it's really, really, really good. The difference between high probability charts is you have the setup plus all the other charts agree. And the difference between low probability is you have the exact same trade setup on the small chart, but the large charts hurt. So now you're up 360. Cool. Nice job. So you went long and you managed it tight, and then you tried to take advantage of getting down to the fibs, and this is the one that I don't particularly care for, the edge of fibs. Support holding. I would prefer you not taking a short after multiple fibs hold, and then either long here or here to get the rest of that. Yep. So you managed it very tight and very quick, but sometimes you don't get the ability to manage it sometimes. So this is an example of a trade short on the small chart, but the large chart said we're going up. So exactly low probability right there. And it didn't work. Luckily you didn't have not too much harm done here, right? You guys notice why Snell's doing good? Look at his entries. I mean, that's pretty sick. Getting in on the low, getting in on the low, getting in on the high, getting in on the high. I mean, that's a really, 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 really good, we talk about this a lot, but buy low, sell high. I mean, that's a really, really good example of that. And, even not quite doing it right, you can get away with it, getting in at great areas. Josie, did I get yours? Let me take a peek here. Okay. So, all triggers are up. Solid support on the blue. This is gold. Gold? Okay, gold. And buying the fib. The only thing that's missing here, Joe, is that you haven't moved your stop quick enough. Because, you probably did it right after you took the picture. I'm sure you did. I know you better than that. So your stop after the pivot, especially when the triggers are rolling up, obviously needs to be the risk greatly reduced, but looks good. How'd that one turn out? Did it go up? So you got a chart in, okay? Here you go. All right, this is crude oil. All right. You pulled your stop up so you wouldn't lose and lost. Yeah. I mean, I have a real simple rule on this one. We talked about it yesterday. What? The rule was, look, I'll just show it to you real quick. I think it's pretty easy and it just make your life a lot easier. Check it out. If you're waiting for a fib, Sal, I just want you to see it from this perspective because I like to use the 8-2 chart a lot for this. This is where you got nervous. and pulled your stop up really tight. If this was your only chart in the world, what scares you into moving your stop up tight? Yeah, I mean, you make 20 ticks, that's fine, but you were going to hold on for the target. So again, look, when you start to manipulate your plan, instead of just taking 20 ticks, right? I mean, look, 15, 20 ticks, you're not going to go wrong, right? If you're risking 10 or less and you're making 15 to 20 and you win half your trades, mathematically impossible to lose money. Now, that doesn't mean you're maximizing money, right? So there are times where you can maximize your money. And I'm going to go out on a limb and say when your 8-2 triggers look like this, you should probably hold for the fib, which would have gotten you out at 80, which in your case, being long from 51, had you got out at 80, would have given you another $170, which would have what? Number one, 170 is great, extra, damn near free, and it will also eradicate your next two losers, if you have losers, right? Which you will eventually. So you need that 170 bucks. So, but again, every time, I love the trade, and again, you made money. You know, you only made 120 bucks, so you didn't make 200. But I want you to have a consistent way to go about, should I hold for more? So you have to predicate your rules on something. So, again, what are you going to predicate your rules on? I personally really like this look on the 8-2 as a sole rule for hang on for that fib. I don't really need to see anything else. Because when it looks like that, 8 out of 10 times it's going up. All right, Lenny, this is trying to figure out what you did here. You went short. Well, okay, so I see what you're doing, okay? So, again, look, I wanted to digest your trade for just half a second here, Lenny, okay? So, on your trade, where did you fall short? Number one, this is the edge. The pivot stop out at the mid-band, at the fib, just for terminology's sake. This is the edge, this is the pivot stop out, this is the pivot stop out. That's the edge. Okay, so what you were attempting was, so you didn't go short from the edge of resistance, or you would have been short from 1548. That was the edge of resistance. What you were attempting to do was a trend trade. Agreed? You were basically saying, hey, everything's going down, I'm going to sell a pullback, right? So here's where the rubber meets the road and where you kind of messed up the party. And again, I like to ask people this, and again, I want to show you in the spreadsheet and, kind of belabor the point a little bit, because you'll see how simple this is at fixing the problem. When you get to your 5-1 chart, I want you to write the support or resistance reasons on your 5-1 chart why you got in. So again, I want you to see this from the spreadsheet perspective on what I want. Because you're going to instantly look at it and go, oh crap, I did the wrong thing. So look, I want you to actually write on your 5-1 chart the area of resistance or support that you bought or sold. Fair enough? Because I think Snell's chart was probably the best at this one. Check it out. And again, he didn't write on there, but he's had software for a while, so he knows better. I want you to see something. Where the heck did his chart go? Right. Look at what he did. I just want you to see it. And again, look, this is the difference between somebody who's had software for a little bit and somebody who hasn't. Look at where he's buying. He's physically buying on the way down at support, at the midband, at the midband, at the midband and 1-to-1. So he's buying low, selling high. But more important, at the areas. You see what I'm saying? So again, when you look at your trade, watch what's going to happen. Do you see what I'm saying though about what he did? He's using the actual area on the way down or the way down or the way up to get in. And when we look at your trade, so look, we're only going to focus on let's say you had the right conditions, okay? Forget about the other charts for a minute. So I don't care about those charts. I want to now focus on your entry chart and look where you sold. You sold what? 1 tick above the blue line. That's not resistance. Had you have sold on the way up to resistance, you would have been going short at 15.46.50, give or take. So you would have literally been selling right there where you were getting stopped out, because that technically is the only resistance on your chart. You see what I'm saying? So had you have just sold on the way up at resistance instead of getting stopped out there, you would have had all of the money. Now, awesome job on selling low. So sell high, buy low, you would have been perfect. I think what you did is you just got a little bit excited about it and you went in too early at the wrong spot with the wrong condition, and that's what got you bumped out. Anyway, it's just a very good visual on the difference between, you sold support versus selling resistance. So when you guys are contemplating your trades and you're putting together these pictures for me, which I appreciate, I want them to incorporate the look of the triggers on the 14.282. I don't need much, just triggers. And then give me the area, buy at fibs, buy at midband, buying at the spot, and then tell me what happened. It's scary because you're like, oh my God, what if it doesn't hold? Well, it doesn't matter. The conditions are right. You're willing to risk 10 ticks. Let's party and get in at the best spot possible. All right, Mike M. All right. I agree it's a good area. And again, this is way earlier this morning. Obviously, this large chart, that doesn't really look like high probability trades, does it, Mike? Sal, if your computer closes down on you, welcome to technology. I don't know, the ghost in the machine sometimes. Who knows what it's called? Mike M, this is a really good example of the small charts looking good and the large charts not. Regardless of what happened after this is not the recipe for long-term success. Sometimes the small charts will win, but I mean, with that look, traditionally you go down a little bit further. So again, I want you to think about your trades and to think about it from a 3-chart perspective. What is the trigger line look on the 14-2 chart? First, left or right, guys? Is the triggers really favorable for a long or a short? And you can see yours, I mean, 14-2 chart wise was not, right? It was the opposite. So do you have a good trigger line look for going long? That's, that's half the battle. Fibs and trigger line reading is half the battle. Once you get the right fibs and you get the right triggers, the trades are intuitive. Right? We break above fibs, we pull back to support, we make it to resistance. Now that we've made it to resistance, we have to, what do? We have to evaluate the chances of breaking through, don't we? Are we going to break through? Are we going to go to the next one? What's going to happen? I don't know. So, look, if you were long, obviously with the large chart reaching a major area, you have to be a little more on guard. Probably keep going, but who knows? And again, look, if you were long and you get out, who cares? Probably missed getting in, didn't you? You guys were probably trying to buy right here and didn't get filled, is what I would guess. Did you guys get along or did you just miss? Missed it? You had an 82 long end. All right. I think it's the right idea. Sometimes they don't always give us a free money fill, right? All right, Siva, you had a longer term range chart, mid-band trend trade long, and then you also had resistance at 56. Nice job. Hey, Siva, just for what it's worth, here's your trade on the market flow. Two times yellow paint bar and a signal long from the bottom, and then here's your second chance after the triggers rolled with a market flow signal. For what it's worth, the way you trade, when you add the market flow to it, it really helps out a lot. Not that you need it because you've had software for 150 years, but the trades that work traditionally have agreements in the market flow too. All right, guys, I'm going to take a short break. I'm going to give you guys a few minutes to think about it. Let me know if you have any questions. If you do, please feel free to put them in. I'll be more than happy to answer them. And again, look, I want you to just think about it. It's a long journey, I had put something together this morning I was going to put out there, but look, some of the hardest careers to get into, and again, not to get into it too much, but I want you to think about, the amount of time surgeons, 4 years of college, 5 to 7 years of specialized medicine, And when you really get, the amount of years necessary to be, and I want you to think about something else too when you look at this list. The average salary for a surgeon or anesthesiologist is $250,000 a year. And it takes them 6 to 12 years to get that. When you look at our little day trading thing, you can take $3,000 and a few months worth of perfect practice. If you make $400 a day, you'll be making twice what a surgeon makes in a year, only trading 8 contracts. That's why everybody wants to do it. Because damn good and well it's possible, but you have to do things properly or else it's just going to be another dream that gets dashed. You've got all the pieces, you've got all the components, you've got the right training, you've got the right software, you've got the right plan, you've got everything that you need to really make money. All you have to do is do it right. And again, it's not rocket science, guys. It's not rocket science. It's 3 things. The right fibs, the right triggers, a couple of entries, and some management. That's it. And again, let me add this before I take my break real quick, because I like to be realistic with people. And I think this is a realistic expectation. Some people are a little bit slower than others, but look, you're going to do a demo of our software, and you could just watch today's video and know that we know what we're talking about and we've got the right pieces. So the demo is not to make you a super trader, which everybody wishes they could be super trader in 10 days. If I had $1 for every time they said, "Oh, I'm not sure I can do it," I'd have a gazillion. So, again, the demo is so you guys or new users can see that we know what we're talking about and that we've got the plan and the path and the right stuff, so you can commit the money to continue learning. Check my spell check there. It's going to take you at least 30 days to put your plan together. If you follow our plan and you figure out which one feels best for you, it won't take you very long. Then you're going to spend 90 to 120 days of trading during the day live. And look, put trades on. Let's see what you got. Post your pictures in. Tell me what you did. Tell me why you did it. Let's see what you know, right? Then, over the course of 90, 120 days, you're going to trade the day live. Let's see what you can do, win, lose, or draw. And then go back and replay the day and fix your mistakes. And if you do this every day for 100 days, trade the day live, post your charts, replay the day, fix your mistakes, and you do it 100 days in a row, what do you think the outcome is going to be in 100 days? 100 days of doing it correctly. Now, I can't get people to do 100 days of doing it correctly, because why? They want to start trading live money, they want to get paid now, they want to cheat the system, and they all lose, and they all get frustrated, and they all go cry, and they all blame old Novak for losing. But it's not true. You guys, the winners and the losers have the same software. The winners follow the path that the winners before them have laid out for them, and the losers do what they think is right. So the only difference between the winners and the losers is how you approach the same software. Software is the same, education's the same, the rules are the same. So again, there's a path to success, and then only when you can guarantee yourself that you're going to win most of the time can you then fund an account. Put a few grand in there. Prove that you can do it real time with real money, and if you lose $1,250, stop. You're not doing it right. You should be able to trade for a month straight on Simulator without a $1,250 per contract drawdown. Do you guys understand what I mean by that? You should be able to trade for a month without losing $1,250 on one contract. And then you should be ready to go. And look, if you do stop and don't blow out, any more money and start over, if you can truly win with $3,000, and you can go 3 months in a row of making $400 a day average on $3,000, you're going to turn $3,000 into $27,000. The confidence is going to be astronomical through the roof, and you've paid yourself back for your time and your pain in the ass and for software and everything else. And then you can compound based on your ability to handle risk and pressure. Some people can go up to 20 contracts and some people can't get above 2. So who are you? I don't know. If you only traded one contract for a whole year and you made $8,000 a month for a whole year straight and you walked away with $96,000 on one contract, would you be mad? Everybody says no, but nobody does it. So we'll see. We'll see what whether you can. You got the talking done, so let's see if you guys got the action. Post in your pictures. Let's see what you got. Now, I'm going to take a break. I'll be back in a few minutes. If you guys have questions, let me know. Otherwise, we'll pick it back up here in a few minutes.